positioned at number 24th in the global ranking in terms of market cap. During the past 5 years, SET has the highest average trading value in ASEAN, and as of this year, it has reached $2 billion per day. Our commission on capital raising is promising. SET 5-year accumulated amount of fundraising IPO is the highest in ASEAN at $18 billion. Specifically, in 2020 alone, the IPO fundraising amount on SET is considered the highest in ASEAN at around $14 billion to date. The first one is the big IPO from Central Retail Corporation with a market cap around $8 billion. And the latest one is SCG Packaging, a subsidiary of Siam Cement with market cap around $4.5 billion. Notably, in 2020, the opening of new accounts during the COVID-19 has been growing dramatically. The number of new stock investors that 9 months is 261,000 persons, twice when compared to the number of new accounts last year. The majority of these new investors enter the market through online channels, both in onboarding and trading. Ladies and gentlemen, to emphasize my message above on the growth of the Thai capital market, we have invited our Thai Chinese linkage brokerage firm, CGS CIMB, to provide you with the updated information on the Thai security industries and performances. In addition, we have invited the Siam Public Company Limited, one of the company listed in SCT since the first day of trading 45 years ago in April 1975. Lastly, sincerely thanks for your participation and input in this seminar. We are confident that you will benefit from the comprehensive picture of the Thai capital market, covering the exchange and the brokerage industries, as well as listed company. I wish you an enjoyable time today. Thank you so much.
Sorapol, for your introduction. Now let's welcome Mr. Azhar, the Director of Securities Market from Bursa Malaysia. Welcome.
Thank you, Tony. My fellow exchange peers, esteemed corporate representatives, honored market intermediaries, distinguished guests, good afternoon and welcome to the manufacturing of the 2020 ASEAN Capital Market Operation Seminar. On behalf of Bursa Malaysia and our co-organizers, the Shenzhen Stock Exchange and the Stock Exchange of Thailand, we wish to thank our distinguished speakers for participating in today's event, and to our guests, thank you for making time to be with us today. We're pleased to participate in the launch of the VNext Overseas Listed Companies Information page, which we hope will enhance the visibility and profile of Malaysia's public listed corporations to China's institutional investors. Ladies and gentlemen, the ASEAN region has experienced tremendous growth, with GDP almost doubling in size between 2010 and 2019, growing at a CAGR of just under 7%. With the projected annual growth rate of over 5.5% per annum moving forward, the ASEAN region is heralded to become the 4th largest economy in the world by 2050. This is right behind China, India, and the United States. Malaysia is the 3rd largest economy in the region currently, contributing approximately 11% of ASEAN GDP cumulatively. The manufacturing sector has played a central role in driving regional growth, especially in Malaysia, where the sector has contributed 21.5% to GDP in 2019. This is consistent with the 21% average recorded close to 6 decades since 1960 until 2019, with the quantum of contribution poised to scale up further to capture the dynamic and constantly evolving global demand, as well as trade diversion opportunities amidst the current geopolitical headwind. Beyond the production of goods and equipment for domestic consumption, the manufacturing sector has contributed immensely to exports, accounting for approximately 85% of export value in 2019, enabling Malaysia to maintain a sustainable trade balance. Moreover, the sector employs approximately 14.5% of the total labor force, fueling purchasing power among not only its employees, but other peripherals throughout the value chain. The purchasing power drives further consumption and investment, stimulating more growth in the economy. It is evident that the COVID-19 pandemic has disrupted conventional operating models, but at the same time, invigorated a paradigm shift towards the new norm. This is centered around the automation and digitalization with a high emphasis on sustainability. This is centered around these efforts by various local authorities and federal government entities such as the Ministry of International Trade and Industry, or MITI, the Malaysian Industrial Investment Development Corporation, or MIDA, the Malaysian Digital Economy Corporation, or MDEC, together have offered a strong pillar of support for our PLCs to embrace change by providing the necessary assistance toward reskilling the workforce and embarking on digitalization efforts. This Malaysian companies to be better prepared and capitalized on the impending opportunities and to navigate tactfully through the challenges moving forward. With government policies, economic resilience, an educated workforce, and a vibrant business ecosystem, Malaysia has continued to attract strong foreign direct investment. Amidst global headwinds in a pandemic-stricken environment, Malaysia has recorded a total of 17.8 billion ringgit worth of foreign investments in the manufacturing sector over the first half of this year, 2020. This involves projects developments have not only improved the quality of life of consumers around the globe, but has given rise to industries as well, providing jobs and avenues for investment. In recent times, some Malaysian PLCs have diversified into PPE manufacturing to satisfy surmounting global demand amidst the pandemic. China remains the largest source of FDI flows in the manufacturing sector, recording a total of 40.3 billion ringgit in investment projects flow, which has created 40,527 jobs between 2016 and 2019. We hope the session today will inspire and enlighten the participants here today on the abundant opportunities available in Malaysia, ensuring a continuation of this trend and further sustaining Malaysia's value proposition as a global manufacturing and supply chain hub. Having said that, the key enablers in this ecosystem continue to play a pivotal role to drive growth in this sector. In Malaysia, MIDA has introduced various incentives to facilitate cross-border investment flows, as well as position Malaysia as an attractive manufacturing and supply chain hub for multinationals affected by geopolitical headwinds and trade sanctions. These incentives include pioneer status, investment tax allowances, reinvestment allowances, incentives for high technology industries, and incentives for strategic projects, and incentives for setting up international or regional service-based operations. More details on these incentives can be found on MIDA's website. As intra-Asian trade increased fourfold from 2000 to 2017, surpassing the growth in global trade of 2.8 times, supported by rising consumption demand from emerging Asian economies, it is imperative that cross-border collaboration and cooperation is fostered to create an enabling, diverse, and well-capitalized ecosystem, and to ensure the demand for future consumers are met in a sustainable manner. As such, we are cognizant of the efforts of our neighbors to foster an enabling and supportive ecosystem throughout the ASEAN region. We hope that this session today ensures the continued cooperation of the parties involved as we work together to cement the position of ASEAN as a favorable, enabling, and attractive investment destination. Thank you very much.
Okay, thank you, Mr. Azhar, for your introduction. Now, let's welcome Mr. Hui Qipei, the Deputy Director of International Department from Shenzhen Stock Exchange.
Thank you, Tony. Dear Dr. Raffo, dear Ms. Azabidi, ladies and gentlemen, good afternoon. It's our honor and pleasure to hold this seminar in collaboration with SET and BN. The ASEAN collaboration has always been the priority for Shenzhen Stock Exchange. And over the past few years, we have maintained very good relations with our peers in the ASEAN regions. SET and BN are our old friends and good friends. We have had a lot of collaborations in terms of personnel exchanges, experience sharing and mutual learning, and exploration in products and business. So one pillar of the exchange collaboration is the collaboration with listed companies, because the ASEAN region's economic investment ties are very strong. So the listed companies on each exchange have great potential for further developing collaboration and win-win cooperation in various terms. So it's very happy for us to hold this kind of seminar today. So this is also the first time we have the trilateral seminar. We are having the listed companies from both China, the Shenzhen Stock Exchange, the SET, and BN. And we are also having investors and financial intermediaries from 3 countries. So this is a very good platform for us, not only to explore and deepen our bilateral collaborations, but also to have a multilateral collaboration and discussion on how we can better facilitate China-ASEAN capital market collaboration. So the year 2020 is the year of China-ASEAN digital economy collaboration. The outbreak of COVID-19 shows the importance of the digital technology in facilitating personnel exchanges and business collaboration. The VNext platform, with its advantage in online broadcasting and showcasing, has become a very important tool for Chinese listed companies and investors to explore overseas reaches. So over the past few years, the VNext platform has become home to more than 300 overseas companies from 41 countries. And today we are also very happy to launch overseas listed companies homepage, which is a kind of innovation to facilitate the overseas listed companies reach to Chinese investors and market community. And it's also very happy that we are having our first batch of listed companies from SET and BN. And last year, the Shenzhen Stock Exchange established a service base in Guangxi region. The Guangxi Autonomous Region is very adjacent to ASEAN countries. So we are establishing this base to show our determination and commitment to further enhance our ties with ASEAN exchanges and market participants. So in the future, we are hoping that we can build this online plus offline service system and an ecosystem with the help of the market participants and our collaboration partners from overseas countries to build a bridge and enhance the ties between China and ASEAN countries. We are also welcoming and looking forward to the suggestions and advices from market participants, our peer exchanges, in how we can better enhance our services and strengthen the collaboration with our ASEAN peers. We hope that from today's seminar, Our listed companies and investors and financial institutions can have a very fruitful discussion and gain the information you would like to seek. And I would also like to wish everyone very good health and all the best. Thank you.
Okay, thank you, Mr. Pei, for your introduction. Let's move on to the introduction of VNEX Overseas Listed Companies information page. Let's welcome the responsible person of VNEX Cross-Border Business, Ms. Joyce, to give us an introduction.
Good afternoon, ladies and gentlemen. Thank you for investing your time with us on this Friday afternoon. My name is Joyce. It is my great honor to introduce the VNEX platform and the beta version of our overseas listed companies information page. VNEX constructed operating Shenzhen Securities Information Company, which is a wholly owned subsidiary of Shenzhen Exchange. It all started with the vision making tracing easy for high startups and SMEs in order to deal with the issue of information asymmetry in property market and bring global innovation resources with China capital and market. Digital technologies have emerged as a key to improve efficiency, security, and service quality. Thus, VNEX platform was launched to provide diversified, inclusive, and knowledge-based teaching services. So far, we have several products shown in this slide, including web photos, mobile app, and WeChat mini program. So talking about our main functions, VNEX has built a holistic information center online and offline. For instance, you can only display your enterprise on VNEX with more exposure to business opportunities. Our algorithm-based deal matching mechanism will also help you better link with potential partners or investors from our community. To lower credit risk, we streamline the process from sourcing, screening, to securing. In addition, you can get support from VNEX whenever you need in all aspects of your business, such as coordinating on intermediaries during due diligence, connecting with governments and incubators, applying for tailored training sessions, and so on. Here are some types of our potential users and partners for your reference. According to the most recent statistics, around 21,500 investors from more than 8,000 PE, VCs, and listed companies are using VNEX products. Now, let's move on to the introduction part of our new service. This brand new page aims to provide a channel for institutional investors to seek high quality overseas industrial cooperation opportunities. The page is open to all users of the VNEX platform, including guest users and registered users. You can easily access to this page by going to our home page and click the exchanges in the menu bar. If you get interest in any company, you will be able to have a glance through the basic information. And most importantly, the detailed cooperation intentions of each company will share on the same page. When you want to connect with the company, just kindly type in your basic information and submit. VNext will get you connected with the company once we receive your request. It's only a beta version. We are happy to receive your feedbacks and suggestions for improving its functions and our services. So welcome to join our community. If there is any question, feel free to contact us. Hope you enjoy today's seminar. Thank you.
Okay, thank you, Joyce, for your introduction. Now let's move on to the third part of the event, the panel discussion. For all panelists, please turn on your camera the whole time during panel discussion and stay mute unless your name is called up by the moderator. 请所有参与讨论的嘉宾在圆桌论坛环节一直保持摄像头打开，参与讨论时再将麦克风打开，谢谢。Now, let's welcome Mr. Bing Yu to host the panel discussion on the development and opportunity of China-ASEAN manufacturing. Welcome.
Good afternoon, ladies and gentlemen. Thank you so much for your time with us. My name is Bing Yu, and I am the director of VNext platform. It is my great honor to be the host of today's panel discussion. Our topic is the development of China and ASEAN manufacturing industry chain. Our goal is that whatever your role is in this industry, that you will come away with something, new idea, a fresh perspective, a new strategy that you can apply to be more successful in your business. It is our pleasure to have 4 important guests to join the discussion today. Please allow me to give you an introduction of them. They are Mr. Sivasuriyamurthy Sandara Raja, the Executive Director of Investment Promotion, Malaysia Investment Development Authority, called MIDA. Mr. Siva joined MIDA in 1989 and served in different agencies of government for 31 years. He was posted in Germany twice to the head office of MIDA in Köln and Frankfurt. And MIDA is the government's principal agency for the promotion of the manufacturing and services sectors in Malaysia. Our next panelist is Mr. Kazem Purnatanamala. Mr. Kazem is the head of research in CGS CIMB Securities, Thailand. He is a rated analyst and was formerly head of Thai research for BNP Paribas. Prior to that, he was a bank's finance analyst at HSBC. He has more than 8 years experience in research. Mr. Kwon Bong Yang, assistant president of CGS CIMB Securities, Singapore. Kwon manages a portfolio of clients and assists them in equities and equity related to derivatives dealing. He has more than 10 years of experience in various financial products, inclusive of equities, margin trading, and fixed income. And Mr. Jin Yi, he is the chief analyst of macro securities in Sealand Securities, China. Mr. Jin focuses on the research of financial market and bond market performance. Prior to the position in Sealand, he was the director of the asset management department and fund manager in Shenzhen Hongyuan Securities, China. He has managed the fixed income fund with accumulated AUM more than 100 billion RMB. Now let's start with the speech of our panelists. Welcome, Mr. Siva from MIDA. Please give us a brief introduction of the services of the agency has provided in the growth of local market. Mr. Siva, please, welcome.
Thank you. Thank you, Mr. Bin Yu, and a very good afternoon to all. Let me first introduce my organization, Malaysian Investment Development Authority. Now, MIDA, as mentioned by Bin Yu, is a government agency. We are the principal government promotion agency of Malaysia, and we are part of the Ministry of International Trade and Industry. We are truly international. We have 20 centers worldwide, and of course, we have 3 offices in China. Yeah, we have an office in Beijing, in Guangzhou, as well as in Shanghai. As you can see from the slide, we assist companies at every level, I would say, from the simplest form of establishment operation in Malaysia, such as rep office or regional office, up to the level of companies at what we call regional establishments or operational headquarters, as well as production facility. Now, MIDA is, beside the investment promotion, we also approve projects. That makes MIDA very unique. So we are an approving authority as well. We approve manufacturing projects in terms of manufacturing license, tax incentives, expatriate posts, as well as import duty exemption. Not only that, MIDA also handhold the implementation of projects. So this makes MIDA quite unique compared to other investment promotion agencies worldwide. Now, this is actually the organization structure of MIDA, as you can see. This is actually the investor's journey from the day we meet the company, talk to the companies on investment opportunities in Malaysia. And of course, we have the various divisions in MIDA which handles the applications when it is submitted, up to the level of projects approved, implemented. And of course, eventually when the company have any issues in terms of implementation, there is a dedicated division in MIDA who handles post-investment matters. Now, in terms of focus areas for investors to invest in Malaysia, in terms of manufacturing sector, there are very clear sectors that we have identified, such as electrical, electronics, machinery equipment, and chemical industries. These are catalytic industries, we would say. And of course, investments in the medical devices, as well as aerospace industries. These are some of the sectors that we are promoting currently. And of course, there are also other various services sectors, high growth services sectors that we are promoting, such as principal hub, green technology, hotel, logistics, so on and so forth. But whatever it is, Malaysia is very focused in attracting high quality investments. This is very important for Malaysia because we are positioning Malaysia as a high-tech hub in Southeast Asia. Yeah? So we are looking at high value added activities, strong linkages, skill intensive activities, as well as high income jobs. These are some of the variables that we use to define quality investments. Now, end of the day, the national aspiration of Malaysia is, of course, to attract investments into complex products and activities in Malaysia. Yeah? And at the same time, we want to create high value jobs for Malaysians. Yeah? So this would be our one of the 2 major aspirations. Of course, we also want to ensure that Malaysian companies, collaborate with all these foreign investors that are coming to Malaysia. And we are also very much into developing new clusters, as well as what we call inclusive economic development throughout all part of Malaysia. Now, here I would like to share some basic investment data. This is actually realized investments in the manufacturing sector. As you can see, some of the largest investors in Malaysia would include Japan, USA, Singapore, Germany. And China is actually ranked number 8. Yeah, this is cumulative investments approved from the 1980 until today. Yeah? But this figure for China will change in the years to come because over the last 4 years, as you can see from the next slide, China has been the largest investor in Malaysia in the manufacturing sector. Yeah? They are the single largest foreign investor in Malaysia. So when these projects are implemented, realized, for example, those projects are approved in 2018, they are implemented now. And most of these projects took off, and those projects approved in 2019, first 6 months of this year. So when this realized investment, the realized investment figure will be much, much higher than which I projected earlier. Yeah? So the ranking would be much better, I would say. Yeah? Currently, they are ranked number 8. Now, these are some major Chinese companies operating in Malaysia in various sectors of the economy. Yeah? You can see there are some 500 companies here as well. Now, as we move forward, as you can see, these are the companies that we are currently targeting. We have about 21 Fortune Global 500 companies from China and Malaysia. We have 54 China companies in Fortune 500, China 500 category. And of course, we have about 105 global establishments with total investment of USD 28.4 million from China in Malaysia. And so these would be some of our targeted companies in terms of categories. Now, of course, as you can see, there is a lot of challenges, especially for foreign companies as well as Chinese companies who are exporting their products, particularly to the United States. And that is the reason why Malaysia is also positioning itself as a global supply chain hub particularly for Chinese companies. Yeah. So those Fortune China 500, global Fortune companies, unicorn companies, and also those companies that Chinese government are promoting under the policy of Made in China 2025 can look at Malaysia to expand their operations, yeah, and make Malaysia as their supply chain hub, yeah, to produce as well as to export your products, not only to ASEAN region, but also to all part of the world. In fact, as we speak, you know, Maida is actually negotiating more than about, I would say, about 100 companies, not only from China, but also foreign companies in China who are looking at the possibility of expanding their operations in Malaysia and making Malaysia as a hub for them to export their products, particularly to the United States. Now is Malaysia, yeah. First, Malaysia is already a tech hub, yeah. For some of these industries, for example, like electrical, electronics, the most mature semiconductor industries in the world in Malaysia. We are ranked number 8 in terms of exports of high-tech products, and we have one of the strongest machinery and equipment industry in ASEAN, yeah, for companies to set up the operation in Malaysia. That's number 1. Number 2 is we are positioning Malaysia as a gateway not only to ASEAN member countries, but also beyond. Yeah? And this can be seen from the location of Malaysia, strategically located in the heart of Southeast Asia. We have signed 14 free trade agreements, which allows for market access for 3.9 billion population. And of course, we are also ranked very highly in DHL Global Connectors Index, where we are ranked number 12 in terms of connectivity. And of course, one of the most important aspects or concern by foreign investors is, are their investments secured? The answer is yes. As you can see, because of our strong IP laws, we allow foreign equity ownership of 100%, free repatriation of profit, yeah? And of course, we have also signed investment guarantee agreements with more than 60 countries around the globe. And of course, in June of this year, due to the COVID pandemic and also the challenges that Malaysia is facing in attracting investments, we have come up with very attractive investment packages. Yeah? This is just one of the incentive packages where the government of Malaysia is now considering free, what you call zero tax rate for up to 10 and up to 15 years for investments worth investments of more than 500 million Malaysian ringgit. Yeah? And we have also set up what we call Project Acceleration or Coordination Unit, whereby manufacturing license approved within 2 working days. And of course, these are just some examples I would like to share with you. Investments from China, LONGi Solar. Now, this is very unique. When it comes to solar industry is fairly new in Malaysia. We attracted our very first investments in 2006. So within 14-year period, we have already established a solar industry in Malaysia. Yeah? So we have all the top-notch foreign companies operating in the solar industry. And of course, now we have LONGi Solar in Malaysia. Now, LONGi is very unique because what they're doing in Malaysia is actually fully integrated, yeah, from the production of what we call raw material, the monocrystalline solar ingots, up to the production of solar module. So this is just one example of Chinese companies setting up their operation in Malaysia due to the value proposition that Malaysia has to offer, including a comprehensive ecosystem of solar industry in Malaysia. Another company is Camel. Yeah? As you can see, Camel is of course one of the largest producers of battery in China as well as in the world. And what they're doing in Malaysia is actually, again, integrated project. Yeah? They're doing it in phases. And of course, they would also be producing lithium-ion batteries in Malaysia. And in fact, I visited their plant, I think about a month ago, and I was quite impressed with the level of investment they've already made and the commitment that Camel has undertaken to further invest in Malaysia. So in conclusion, I would say, in a nutshell, we are positioning Malaysia as as a high-tech hub, not only investment from China, from all over the world. And we won't be able to do that if not for our international standing. As you can see from all these accolades that Malaysia and of course Maida has accumulated over the years. Now, what is very important for investors is that, is it easy for you to do business in Malaysia? The answer is yes. Is it profitable for you to do business in Malaysia? The answer is yes. If you look at UNCTAD ranking, Malaysia is ranked very favorably in terms of rate of return for investors to do business in Malaysia. We are ranked, I think, the rate of return is about 17 to 25%. Yeah. So end of the day, is it profitable? The answer is yes. Is it easy for you to do business? The answer is yes. Now, what is important is having MIDA there. Yeah, we have 3 offices in China. We are there. Chinese investors can talk to them, get all the necessary information. And more important is for you to talk to your own investors who are operating in Malaysia. Talk to them. Get the latest information. How easy and what are the challenges that investors face in doing investment in Malaysia. And what is more important is having MIDA there to actually to guide you to get all the necessary information, to get all the necessary approvals. And of course, eventually when you set up the operation, having somebody there to actually to handhold in the implementation of a project in Malaysia. So with that, I would like to conclude my presentation. So during the panel discussion later, I will be able to share more information based on your questions. Thank you. Thank you for the opportunity given for MIDA to share information on doing business in Malaysia. Thank you.
Thank you very much, Mr. Siva. Because short of time, so we change the schedule a little bit. So Mr. Siva, may I ask you some question about the topic you shared right now? I mean,
sure.
Yeah. Thank you. Could you share with some with us how the manufacturing has changed in Thailand in the past 5 years? You have already saying that Malaysia is becoming the high-tech hub and manufacturing hub in the global economy. So what do you predict will happen in the next 5 to 10 years? Thank you.
Well, I would say, Malaysia has
Mr. Siva, I'm sorry. I confused with the question. I'm sorry for that. Oh, okay. Your question, I'm sorry for that. Your question is that what is the first step for the Chinese investors to move to Malaysia market? I mean, either in investment perspective or other business cooperation. Thank you. Yeah.
Okay, let me answer both of your questions.
Yeah.
No, the first step I would say is for Chinese investors is to gather as much information as possible on Malaysia's investment climate. Yeah. In terms of investment policies, in terms of the agencies which are responsible in providing all the necessary approvals. Yeah. So the first step I would say is that talk to our guys who are there. Yeah. We have 3 offices in China, in Beijing, in Shanghai, as well as in Guangzhou. Yeah. Get the latest information. That's number 1. Number 2, MIDA would be able to advise the company in terms of submitting the application for the right approvals. So if you're talking about manufacturing company setting up in Malaysia, then you can get all the necessary approvals, the forms, the application forms, and all the information from our office in China itself. And the next step is, of course, for you to actually to visit Malaysia. Currently, of course, the border is somewhat is closed, but on a case-by-case basis, we do allow investors to come in. Yeah. So if companies are willing to look at some locations here so that they can have first-hand information, we would welcome that. And of course, once the application is submitted, MIDA is there actually to provide the necessary approvals based on the timeline given by the company. Yeah. So these would be, I would say, some of the very early steps that can be taken, yeah, for companies to make their decision. Now, to come back to your question with regards to the sectors that we are promoting, of course, we are promoting high-tech industries currently. Over the last 10 years, I would say, or since 2000, we have been promoting high-tech industries. So the companies today that are operating in Malaysia are undertaking very high value-added activities. They are not simple assembly operation. They are labor-intensive operation. We want companies to undertake research and development activities in Malaysia as well, as much as possible. Yeah. And of course, we also want companies to incorporate element of Industry 4.0 in their operation in Malaysia. Yeah, we are not saying that it has to be fully automated, but as much as possible, try to reduce the manpower requirements and try to employ high-skilled manpower. And MIDA is there actually to assist you in terms of providing the necessary support to go full automation, because a lot of facilities are there for Industry 4.0 adoption, and also for you to get technical experts. We allow foreign technical experts. We also try to find as much as possible our local talent, yeah, we have thousands of Malaysian students who are actually studying abroad, in Germany, in France, in UK, yeah, in China, whereby these Malaysian experts or Malaysian talents can also be employed by foreign companies who are operating in Malaysia. Yeah. So these are some of the information that I would like to share with you with regards to early stage of doing business in Malaysia. I'm sorry, I can't hear you. I think your mic is muted. Yes.
Okay. Yeah. Thank you very much, Mr. Keta. Because of the time limitation, so may I move to the next panelist, Mr. Kazem from CGS SAI MB Thailand. Mr. Kazem, would you please explain your role in the local market and share your experience in the sector? Thank you very much.
Okay. Thank you, Mr. Bin Yu, and good afternoon, distinguished guests, ladies and gentlemen. It's our honor to be here today, and on behalf of CGS CIMB, let me briefly introduce our services and also mention who we are. Basically, CGS CIMB Securities is a 50-50 joint venture between China Galaxy International Financial Holding and CIMB Group. And for CGS Securities, CGS CIMB Securities, we have been in the Thai market since 2005, which is about 15 years ago when we acquired GK Gold Securities. At the time, GK Gold was just a representative office with a handful of staff. After that, in 2008, we acquired Sigco Securities as well as BT Securities. So today, CGS CIMB Security in Thailand has more than 600 staff, and we rank one of the top brokers in Thailand. And our business includes retail broking, institution business, derivative, prime service, equity research, wealth management, and online broking. And our strategy, for the business in Thailand is that CGS CIMB provide wider coverage of research than most foreign houses. Meanwhile, we provide more in-depth coverage than most local houses. That's basically sum up our business here in Thailand. Thank you.
Hi, thank you very much, Mr. Kazem. So I would like to ask you some questions. One is the question I have raised to Mr. Kazem about what is your opinion about how the manufacturing has changed in Thailand in the past 5 years, and what will happen in the next 5 to 10 years. And the second question is about what are the do's and don't do's for those who want to invest in or manufacture in Thailand. Thank you.
Okay, thank you. Actually, over the past 5 years, we have seen manufacturing sector in Thailand upgrading their capabilities. They have add more value to their products. In the past, they just export the simple products. Now, they are upgrading their products to the next level. For instance, Thailand has been strong in food and food processing industry. Over the years, we have upgraded our food industry. So instead of exporting just raw material, we also export canned food, processed chicken, and Thailand has also become known as kitchen of the world. And apart from food and beverage sector, as you know, Thailand is also strong in auto production. Basically, Thailand is the hub of Southeast Asia in auto production, I think, over the past couple of decades. And over the years, we have seen related industry being developed alongside the auto sector in Thailand. For instance, electronic related to automobile, and this sector has been growing fast. And many firms in this segment have become world-class. And I believe that over the next 5 to 10 years, there are several other industries that can also fully upgrade it to the world-class level. For instance, as you know, Thailand is strong in the medical tourism as well as wellness sector. So I think over the next 5 to 10 years, Thailand will see significant development in medical devices industry. And I think there will be tremendous opportunity for a Chinese company to invest in this segment. And for your second question regarding and don't in Thailand, first I want to mention, for the do business in Thailand, I think they should follow the rules and regulations strictly. That will save them a lot of time and save them from a lot of headaches. And apart from that, in order to be a good corporate citizen, I think now there has been increasing awareness of ESG issues in Thailand. These are environmental, social, and governance. So if they start, their businesses in Thailand with this in mind, I think they will be able to run their business more smoothly as well. Apart from this, I think Thailand also have a nice culture. So if they can also observe the Thai culture, and I think they should be able to do well in Thailand. Basically, Thai people are easygoing people, and we basically welcome foreigners and foreign investors. So I think foreigners normally feel at ease when they are in Thailand. Some people mentioned that they feel more comfortable when they are in Thailand than they are in their home countries, which also quite surprised me. However, what they should not do is that they should not start their business before they have proof of operation. Basically, should have their licenses ready first before they start their operation, because otherwise that may break some of the rules and regulations. And as I mentioned, I think they should also do not violate those ESG issues. Apart from that, I think one of the things that Thai people respect is the loyal family. So don't show any disrespect to the loyal family, basically. That's some of my answers. Back to you. Thank you.
Thank you very much, Mr. Kazam. You share that the Thailand is the kitchen of the world, and the auto production and medical device sector is becoming better than before. And if the investor want to do some business or do the investment in Thailand, you must following the regulation, the ESG rules, and the Thai culture. Thank you very much, Mr. Kevin. Let's move to our next panelist, Mr. Kongbong Yang, the Assistant Vice President from CGS CIMB Securities. Mr. Kwon, would you please give us a brief introduction? Thank you.
Hello, my
Mr.
name is
Kwon.
Bo Yang. I'm from CGS CIMB Securities Singapore. Okay.
Please.
Okay, this is the business, this statement from our Economic Development Board, EDB, from Singapore. So basically, it's said give us the expectation of the business from this this outlook on the fourth quarter. And this slide is just to showcase the some award winnings for Singapore's as a whole. In terms of global competitive economy, we won the World Economic Forums and also first in IMD Smart Cities Index and World's Digital Competitive Ranking in 2019. And for pro-business environment, we are in the second in the World's Bank Group's Doing Business 2020 reports. And besides, IMF also reaffirmed that Singapore's financial sector is one of the best in global in 2019's Financial Sector Assessment Program. Cannot control. Oh, okay. This is the latest articles recently. So there's a new manufacturing office set up in Singapore at this Jurong Innovation District, JID. So this JID actually draws quite a lot of investment to Singapore. Big names like Hyundai, the South Korean automobile manufacturer, Konica Minolta Imaging Product manufacturer, robotic developer, Fanuc, and also this Bosch are all opening these facilities in JID. Now, this AMTA was announced by our Deputy Prime Minister, Mr. Heng Swee Keat, during the Industrial Transformation Asian Pacific Congress. Okay, now why listing in Singapore Exchange? There's a 5 points that is listed there, which I extract from this exchange. So Singapore is one of the world's most competitive economy in the world and is recognized as a dynamic global financial hub with the total asset of more than 2.4 trillion under management. Singapore also boasts core sectors in finance, consumers, health and technologies, and commodities resource. Besides, Singapore is also have one of the largest REITs markets in Asia. As for third one, to capture the attention of global investor, Singapore is the wealth management hub of Asia, and also the largest foreign exchange trading centers and active commodities trading centers. Singapore also offers extensive network of free trade agreements and double tax avoidance agreement, as well as to support the various Singapore government agency. Now, for trusted regulatory regime, actually, why the screen just jumped straight away? Can go back to earlier screen. Okay, right. Okay. So I just want to give the last point. Singapore also offers the very smooth listing process. An issue manager and a full sponsor and also the profession will be arranged for a consultant before listing to understand the whole company business structure before submitting the listing application to SGX. And SGX will also arrange a listing relationship manager to make sure that all these things is smooth before the actual submission to the SGX for the listing. Okay, so this is the two companies that I want to bring as example. One is Venture Corp, another one is Wilmar International. Venture Corp is incorporated in 1984 and Wilmar is incorporated in 1999. Venture Corp have a market cap of 5.9 billion in Sing dollar, while Wilmar is standing at 26.9 billion Sing dollar. Now, this is the trading volumes on 2019, the top 10 most traded manufacturing stocks, ranging from maritime, F&B, value change management, aerospace, and high-tech industry. Now, do note that these Wilmars and Venture have a very high average daily turnover, about 20 million. Another one is the latest one on 2020 August. You can see that Venture also is one of ranked at the most 5 actively traded Singapore stocks. Okay, now why CGS CIMB? We have the very strong brand name we have also number 1 in the market shares in Singapore markets, and we have very good brand presence in China. And this offers the opportunity for all the investors from all the world. And we are also credit rating under BAA. So the funds that you invest in us will be deemed safe. And we also offers for the joint venture of 50-50 with the CGI Finance Holding. This opens the door for us to enter this China market. So what happened is that we can actually help the China's clients from China's or this corporate from China's to open the account offshore and facilitate them from transferring funds to us and do their investment over here. There are various this our global presence in around the world, and there's a various products that we offer to cater for clients' need, like for example equities, futures, CFDs, margin trading, forex, bonds, and so on and so forth. Yeah, and I think I just ended my presentation.
Thank you very much, Boyang. Thank you. Yeah, we have 2 questions for you. The year of 2020 has recorded the worst public health and economic crisis in a century caused by the COVID-19. It's a problem we cannot ignore. So, Mr. Boyang, Singapore is the financial center in Asia, and the financial sector has strong competitive advantages. From your observation, what is the biggest challenge in manufacturing sector at the moment? And do you have any existing? And the second question is about your cooperation with China, and if you can give us some example about how you support the companies across border to make some cooperation based on your services. Thank you.
Okay, for the first question, right, I think the biggest challenge is this COVID-19 pandemic that actually causes all the things to slow down, which I think that I just shared in the first slides, and also some others like economic conditions that also are slowing down all the biggest challenge for the manufacturing, such as this tension in the trade wars. Yeah, I think these are the two things that actually affected the export orders. And for second question on the existing cooperation, we don't have any in particular pertaining to this topic for the manufacturing. However, we have our partnership with CGS and also CGI from Hong Kong.
Yeah, so based on the cooperation with CGS and CGS Hong Kong, I believe maybe your clients, I mean, may have some potential cooperation opportunities to realize that based on your support. I think so. Yeah. Thank you. Yeah, no. Thank you, Boyang. Yeah.
No problem.
Yeah, thank you very much. And let's welcome Mr. Jin from Sealand Securities to give us some introduction about more information about China. Mr. Jin, please. Excuse me. I will switch to Chinese to ask Ms. Jin to make his presentation. Yeah, Jin.
Okay, thank you.
金手机，谢谢。
好的。各位观众各位这个朋友，那么大家下午好。
Distinguished guests and friends, good afternoon. I'm from the Sealand Securities and I am their chief analyst. And it is my great honor and a pleasure to share with you our perspective. And the topic of my presentation is to grasp the historical opportunity and to embark on a brand new chapter of China-ASEAN cooperation. And because my expertise is in macroeconomic study and research, so from my expertise and from my perspective, I would like to provide you with our understanding of this topic. How could I switch to or change to the next slide? Okay, there are three parts to my presentation. First, I would like to look back at the 10 years of the development of China-ASEAN cooperation. And the second part is to look at our current situation. And third part is our future perspective or future prospect. And so if we look back at the 10 years of China-ASEAN trade and economic relationships, there are three major stages. In the first great leap was the launch of a China-ASEAN Free Trade Zone, which is the free trade zone that with the biggest number of population, the third largest FTZ in the world, and 90% of its commodities realized zero duty. And this is a very positive collaboration between the two sides. And in 2013, that China put forward the Belt and Road Initiative, and ASEAN was designated as the first stop of our maritime Silk Road. And so our trade has expanded from only on cargoes and commodities to infrastructure, capacity and technology investment, and human resources or people-to-people exchange. And in 2020, that China put forward a new development strategy that is a dual cycle or dual circulation, where we put the equal emphasis on both domestic and international development. And so China and ASEAN relationship, especially our trade and economic relationship, I believe will become an anchor of China's globalization. And this will inject new connotation or new vitality to our bilateral trade. And we can see this reflected in numbers. In 2010, our bilateral trade was 292.8 billion. And in 2013, it's a 443.5 billion, and in 2019, it's a staggering 642 billion US dollars. And so if we look at today's report card, that ASEAN is now especially under the influence of COVID-19 and with our very strong grip and a containment at this epidemic. Now China has contained the disease, and among all the major trading partners and ASEAN, and now surpassing other partners, becoming China's largest trading partner in the world historically. And we could see that in the graph here. Of course, people may say that this year affected by COVID-19, European countries or American are affected some even more severely than us. So this might be reflected in their trading numbers. But I believe that ASEAN becoming our biggest trading partner says something, even though it's partially due to COVID-19, but still it becoming our biggest trading partner because of years of collaboration, because of years of solidifying our trade. And at the same time, we on the basis of our already very optimistic collaboration and looking into the future, there are a few directions I think we can pursue in the short term, that or in the past, that we have already been collaborating and cooperating with each other in a wide range of areas and topics. And so because this is a manufacturing seminar, and we should further deepen our collaboration in this sector, especially in medical devices and or medicine related area or sectors, and which have already laid a very solid foundation in the past few years. And in the next round of cooperation, especially on the basis of our containment of COVID-19, that both the governments on both sides could do more in this aspect in medical related and medical equipment related sectors. I think it is quite necessary for us to further strengthen our cooperation. And looking at a mid and long-term perspective, this year, China put forward the dual circulation strategy, which means that ASEAN countries will see a more open Chinese market with greater potentialities, because our dual circulation or dual cycle strategy means an economic development pattern that takes domestic development as the mainstay, with domestic and international development reinforcing each other, which means we need to further open our market and further reform our market to stimulate our domestic needs and potentials, and to stabilize and to further develop our economy in a steady and sound way. For ASEAN countries, it means that China, as a country with 1.4 billion population and a huge market, will be more dynamic and more diversified and more open in the future. So facing this historical opportunity, and in the next stage, our bilateral trade, I believe, will reach an even higher level. And this dual cycle strategy means more bilateral trade opportunities for both China and ASEAN, because our dual circulation strategy means China is not closing its doors, but to restructuring our domestic industries at the same time to play a stronger role on international stage in terms of our in the industrial chain, and ASEAN as a neighboring country and as the first stop of a maritime Silk Road, and also as a very as a region that's strong in manufacturing sector, which is the theme and topic of this afternoon's seminar. There is a lot we can work on and a lot we can collaborate in. And Guangxi province as a very important economic player here, and us, Darussalam Securities, and we are going to bring in more resources and also to help Chinese companies in understanding the international market and also under the leadership of the central government to help these companies to further implement their strategies, their projects, and also to set up our financial products and in overseas markets, and also help Chinese companies financing in other markets. So with this, I conclude my presentation. Thank you. Thank you very much, Mr. Jin. I would like to ask you a question that is based on your presentation, that is about an overview of the bilateral trade between China and ASEAN. And even though we're affected by COVID-19, but behind these numbers, I believe there are more reasons and many in-depth reasons, or there are many opportunities.
I would like to mention that the other panelists, you can switch the button to hear the translation from the interpreter. Yeah, thank you. 谢谢。金手机，请。
好的。
So, Mr. Jin, please. Well, to answer your question, looking at the figures and numbers in the first 9 months, that ASEAN is now China's biggest trading partner. And of course, some of the reasons are COVID-19 related, but I believe partially is also because of the solid foundation that we have been laying in the past few years. The ASEAN becoming China's biggest trading partner, and of course, against the backdrop of trade frictions between China and a certain country in the world, the ASEAN is one of our intermediary ports, and that is one reason. The other is against the backdrop and in the face of a restructuring happening not only in China, but also in other markets in the world, to further expand China's trade to collaborate closer with ASEAN is definitely a strategic move and a very clever one. And actually, I think so far, Asian countries are doing better in terms of the containment and the response to COVID-19. That is why we see such a prosperous development of our bilateral trade. And for the next step or in the future, I do believe in the huge potential that's still waited to be unleashed. And there are several reasons for that. First of all, from the perspective of ASEAN, ASEAN is also a huge market with a huge number of population. And also the population is young and is well structured, that half of its population is between the age of 25 to 45. And also, in total, our population, China plus ASEAN, we surpass 2 billion. And so it is definitely competitive. So based on this and with this huge number of population, it will bring us huge market and numerous demands and needs. And also with a well-structured population, we can help each other, we can assist each other and be complementary to each other. For example, China is currently moving out some part of our manufacturing services, and also we are building and collaborating in high-tech sectors, and these all unleashes opportunities and potentials and demands, and this will lay solid foundation for our future cooperation.
Thank you very much for your sharing.
Thank you very much.
So time flies. So we come to the end of this part. And today we have Mr. Siva, who gave us a full page of the economy and the manufacturing sector of Malaysia. And Mr. Kazam shared the point about how Thailand is moving from a world kitchen to a manufacturing hub in ASEAN. And Boyan told us how attractive the Singapore stock market is to support the manufacturing companies in ASEAN market. And last, Mr. Jin shared about what happened between China and ASEAN and what is the potential opportunities for all the participants in the market. So I would like to give a huge thanks to our panelists, and I am excited about the coming changes between China and ASEAN. So I hope you enjoyed them as much as I did. And thank you very much. Thank you very much. So please close the video and we can move to the next part of the event. Thank you very much. Our host, Tony, thank you.
Okay, that was a brilliant panel discussion. We will continue with the roadshow by 3 listed companies. They are Siam Cement Group, SCG from Thailand, Top Glove Corporation Berhad from Malaysia, and Beibu Golf Board from China. For all audience, please leave your questions in the chatting area. Thank you. 请所有观众将您的问题留在下方聊天区域内，谢谢。First, let's welcome Mr. Tom Suk, the CFO and Vice President of Finance and Investment from Siam Cement Group, SCG. Welcome.
Hi. Okay. Can I start?
Yeah, of course, you can start now.
Okay. So first of all, thank you for inviting us, and very good opportunities to talk to you. I just want to, just a moment, I try to click the slide. Okay. So I think it's some delay.
Yeah, there's a slight delay when you're switching the slides, so please be patient.
Okay, so probably I can just keep talking. Next page, please. Okay, just for introduction, you are talking about ASEAN, and SCG is one of the very few company that can call itself the truly ASEAN company. Okay, at the moment we operate in 9 countries in ASEAN, and this is more than 15 years already. So ASEAN is the very diverse areas, very big, huge potential in terms of the market, in terms of the production base, in terms of the consumer demands. But if you look in ASEAN, country by country, you could see that they are quite different in terms of the culture, preference, and rule and regulation, the way that you can approach the market. SCG has been in this market for quite some time, and we can say that we have a very deep understanding of the ASEAN market, and we are one of the few who can really draw the potential of ASEAN. Because if you really want to enter into just one market like Thailand, Malaysia, Singapore, Vietnam, you can go directly. But in order to draw the synergy, to draw the potential of the regions, you need to have a deep understanding and locate to the right location. And of course, you need to have a very comprehensive logistic network to link all of the market together. So SCG is the company that can do this. Okay, and if you look at the asset base, our asset base is about $23 billion in terms of the asset side, and about 40% is outside Thailand. Okay. Next, please. And what I can say is with our deep rooted in ASEAN and our operation across many countries in ASEAN, we developed a very unique business model. Please go back. We developed a very unique business model that allow us to enjoy the recoveries. Okay, people are talking about the K-shaped recovery, but anyway, anyway, I think this page is okay. I can just talk. So for the K-shaped recoveries, we believe that SCG is on the upper leg due to our unique business model. Okay, SCG at the moment consists of 3 main core business and 1 investment portfolio. The largest one is the chemical. The unique business model for the chemical industry, we have the two complex in Thailand. We have the major investment in the Vietnam, in South Vietnam, which is the high growth location. And we have the investment in the Indonesia, the only complex in Indonesia. In terms of the investment footprint for the chemical, we can draw the synergy across the ASEAN. And we also have the technologies. We call it high value added technologies. These kind of the high value added technologies allow us to enjoy the margin above the commodity margin. And it's quite significant if you look at our financial performance. And in the chemical industry, in the chemical business, we also have the business model that's target at the circular economy. This addressing the plastic waste, plastic recycle. So in order to create a sustainable business model, you need to not only have the production base, but also the technologies that can bring back the plastic waste and make it like a virgin plastic. So we believe that this is very, very important market segment into the future, and ASEAN need this kind of the technologies and model. We are connected to all of the leading players like a Dow Chemical, Mitsubishi, Mitsui, and later on you're going to see that we also connect to CAS, the China Academy of Science. So these are the linkage that we can pull the strength of each player and put into the single business model to serve the ASEAN market. Next, please. The next business, is the cement and building materials. This is the oldest business that as old as 107 years. But if you look at the cement and building materials that SCGR operating is not making a cement bag or cement bulk, but we are more toward the omni-channel and e-marketplace. Okay, so for cement and building materials, we are coverage ranging from the cement manufacturing, construction materials, or even the pre-built house to the service and solution that can repair and maintenance all the key infrastructure in the regions. So the coverage is starting from the materials to the service and solution for the infrastructure project and for the house and renovation. And at the moment, the latest developments, we are the one who are promoting the solar roof for individual households. So these are the new developments that we are converting all the house in Thailand, in ASEAN, into the solar roof. So this is riding the wave of the electricity revolution. And we also investing in the construction material platform. One of the example is the Knock Knock. So in order to serve the ASEAN market, you need to have the platform supplier and seller, logistic provider, installer together. And in a way that we serve the market effectively. See that Knock is one of the fastest growth platform for the construction materials in the region. So these are the unique business model that we can do the synergy across the ASEAN. And the next one is on the packaging. We are the market leader in the packaging business in ASEAN with more than 4,000 plus customer across the regions. And in terms of the SKU is more than 120 1,000 SKU can offer. Our unique business model, starting from the waste paper collection to the packagings that design, batch by batch for individual customer, and the customer are all the MNC customer that we can serve, and it's ranging from primary packaging, secondary packaging, tertiary packaging, and service and bundlings. One of the very unique technologies that we have is called, the G-coating technologies, where we can improve the strength of the fiber-based paper and can enhance the properties to serve this kind of the circular economy for that required by the brand owner. Okay, so next. So SCG is on the step of transformation. You will see that we have the major investment in Vietnam, in Indonesia, in Philippines, which, for example, for the chemical business, our capacity growth will be around 70%, 70 growth in the next few years. For the packaging business, we will double size. Now we are the leader, and we're going to be a dominant one by double size of our sales revenues in the next 5 years. And for the cement and building materials, we are increasing the service solution, logistic, supply chain, and platform to cover the whole ASEAN. Next, please. Last but not least, I think the very important one is the SCG is one of the world-class ESG company. We have a very strong track record on the environmental, social, and governance. And you could see that we are the member of the WBCSD and Dow Jones Sustainability Index, United Nations Global Compacts, and just to name a few. Okay, so we believe that ESG will be create a sustainable business for the long term. Next, please. And we believe that SCG is one of the preferred ASEAN partner for Chinese company and the institutes. At the moment, we have a lot of collaboration with China, and we are partnered with just give you some example, Chinese Academy of Science, CAS. And also we are in the position to capture the Belt Road Initiative that can link BRI to the EEC in Thailand also. Okay, next. Our history is 100 years, and we're still young because we believe that we are transform ourselves since a while. So a long history will give you a stability in terms of what we do, and we are looking for the long-term partnership. So that's all. If you have any question.
Okay, thank you. Here we have a couple of questions collected from the chatting room. So the first question is that, what is your expectation for the next years manufacturing?
In the next years, the business will complete St. Peter project in the south. That will be a huge expansion of the capacity. That's number one. Number two, we will be leader in plastic recycle technology and business model. That chemical business model we are capturing. If that's important, because consumer will give back to those kind of the recycle that can form the same way as the virgin plastics. For the packaging business, as I mentioned, moment we are market leader in ASEAN. We believe that ASEAN enjoy the benefit of the FDI that's coming in, and we will double the capacities and the company to serve our customer in the regions. in order to operate in ASEAN competitively, you need to draw the synergy across the country in ASEAN, not just the individual local market. And for cement and building materials, you're going to see us moving toward the solution. At the moment, if you want to build we can build from the factory and put it on the site within less than a month. In the house than 1 month. That's can do. Believe that house environmental friendly, all the price and the solar cell to be the future of the living in ASEAN.
Thank you. There's a question, the chatting room. So what's your secret for operating more than 100 years?
I think the secret is you don't remember how old you are. You need to renew it every 5 years. Because if you stick to something longer than 5 years, then that's quite dangerous at the moment. Transformation every 5 years.
Okay, thank you, Mr. Tamsak. Thank you for joining this roadshow. Now let's welcome Mr. Lim, the Executive Director of Top Glove Cooperation. Go ahead.
Thank you, Tony, for the introduction. Good afternoon to all distinguished guests, ladies and gentlemen. We'd like to thank Bursa Malaysia, Shenzhen Stock Exchange, and Stock Exchange of Thailand for hosting this event. And congratulations to Shenzhen Stock Exchange for the launching of this VNext OOC listed companies information page. So Top Glove is honored to be given an opportunity to introduce the company in this seminar. So at Top Glove, at the start of every meeting or presentation, we will start off with this business ethics slides. This emphasize the importance of the corporate culture of business ethics, which is top honesty, top integrity, and top transparency. Sorry, just we are unable to control the slides. Have you shared the control with us, Tony?
Okay, just say next page. We will switch the slides for you.
Yeah, next page. Okay. Yeah, next again.
Next.
So Top Glove is the world's largest rubber glove manufacturer with around 25% global market shares. We are the world's largest manufacturer for nitrile glove, natural rubber glove, and surgical glove. Our gloves are mainly used in the healthcare industries. Our market cap currently is US $17 billion, and this put Top Glove as the second largest market cap company in Bursa Malaysia. We have an annual capacity of 86 billion pieces of glove, and our gloves are sold globally to around 2,000 customers across all the countries in the world and supported by our 20,000 employees. Next slide. So Top Gloves was founded by our executive chairman, Tan Sri Lim Wichai, in 1991. We started with one small factory, but over the years, the company has grown leaps and bounds to become the world's largest natural rubber manufacturer in 2004, world's largest manufacturer of surgical glove in 2018, and the world's largest nitrile glove manufacturer in 2020. We were listed in Bursa Malaysia in 2001 and has our secondary listing in Singapore Stock Exchange, SGX, in 2016. So over the years as well, we have also ventured into outside Malaysia with the setting of our operation in US, Thailand, China, Germany, and Vietnam. Next slide. Globally, the glove demand has been growing at around 10% annually. And in 2019, global glove demand is estimated to be around 298 billion pieces. We expect to grow higher next few years, mainly due to the COVID-19 pandemic. In 2020, we expect a growth rate of 20% and 25% in 2021. So assuming pandemic ends in 2021, we estimate annual demand to be around 15% annually, which is still higher than the pre-pandemic of 10%. mainly due to the higher awareness of the importance of glove usage and also more glove usage in the non-healthcare sector. Developing countries that started to use glove during pandemic will not stop using after that. In fact, the growth rate will increase as healthcare workers will know the importance of using glove to protect their life, as glove is an essential items in the healthcare industries. Currently estimated 70% of the global glove usage is in the developed countries, which has only around 20% of world population, whereas 30% of glove usage is only used in other regions, which has 80% of glove world population. So this is shown clearer in the next slide. If you go to the next slide. So the next slide here shown the glove usage per capita basis. Developed countries are using more than 100 pieces of glove per population. Example, 150 pieces in US, 141 in Germany, and 123 pieces in Italy. Whereas most developing countries usage is still very low, some even less than 10 pieces. This means there is a lot of opportunity for demand and usage of gloves going forward. As standard of living and healthcare spending in developed countries will increase over the years and more gloves will be required. So next slide is top glove sell to every countries in the world with around 2,000 customers globally. The largest market is North America, which is at 22%, Asia ex Japan at 19%, Western and Eastern Europe at 17%, Japan 8%, Latin America 8%, Middle East 6%, and Africa at 3%. We have marketing office in US, Germany, Brazil, China, and Thailand and Malaysia to serve the global demand. Next slide. Top glove produce both natural rubber and synthetic glove. We have our nitrile glove, latex powder glove, latex powder free glove, a vinyl glove, and surgical glove. Different type of glove is to cater for a different country's need. Developed countries prefer nitrile glove, whereas developed countries mainly use developing countries are mainly using natural rubber powder glove. Currently, nitrile is 53% of total sales, followed by natural rubber powder glove, which is 17%. Latex powder-free gloves, 19%, surgical glove at 8%, and the balance is vinyl and CPE glove. So nitrile glove production increased significantly over the years as more users prefer nitrile glove. So next slide. This slide shows the demand of the glove during this pandemic, COVID-19 pandemic period. In a normal pre-pandemic, our lead time is around 30 to 40 days. The lead time refers to the time the customers place an order to delivery of the glove. But due to the pandemic, we can see that the lead time of glove has increased. Like for example, nitrile glove is 660 days now, meaning customer will have to wait for almost 2 years to get their glove if they place their order now. For natural rubber glove, it's 370 days, which is almost 1 year waiting period. Vinyl is 220 days, and surgical glove is 100 days. As the pandemic cases get more severe with wave going on Europe and US, so we are seeing strong demand of to come in. Even if vaccine is found, which we hope it will be discovered soon to reduce the suffering of people, the glove usage will continue to be required as vaccine will not be able to make available to global population in the next 1 year. So we expect strong demand for glove to continue until the year 2022. Next slide is on our financial year results. Our year is 31st August, and for the financial year 2020, we have delivered an exceptional good results for 2020 due to the strong demand of glove from the pandemic. We have achieved a revenue of 7.2 billion, which is an increase of 515%. Profit after tax of 1.9 billion, increase of 417%, with operating cash flow of 3.1 billion, increase of 500%. So we expect good performance in the coming years as well due to the strong demand of glove. Next slide is on the capex. So good results does not mean that we will stop at where we are today. So as demand for glove will continue to increase, Top Glove has been expanding its capacity every year, not only expanding during the pandemic period. So we have planned to increase additional 100 billion pieces of glove in the next 5 years to financial year 2025. We have earmarked 10 billion for capital expenditure over the next 5 years to be invested in several key areas, including new capacity, enhancement of existing manufacturing facilities, Industry 4.0 initiative, a gamma sterilization plant, land bank for future expansion, IT upgrades, workers facilities. So we invite investors or potential suppliers in China as well that having such technology to cooperate with Top Glove in our capital expenditure investment in our new factories for the next 5 years. Next slide is on our performance since our listing in 2001 in Bursa Malaysia. So our compounded annual growth rate for revenue is 23.1% and net profit is 28.6%, meaning we double our size average every 4 years. Average profit after tax margin is 12.2% for the past 20 years. Next slide on the dividend payment. So as a listed company, so with the good earnings as well, which we have sustainable high dividend payout to reward our shareholders. Our dividend policy is 50% payout ratio. And for financial year 2020, the dividend has increased by 373%. So for the financial year, dividend payment will be on a quarterly basis, which payment will be in January, April, July, and November. So since our listing as well, we have paid 1.84 billion of dividend to our shareholders. Next slide will be on our return to our shareholders, to our investors. So this slide shows the shareholders' return for those who have invested in Top Glove. So since listing in 2001, we have good track record in shareholders' return. The total shareholders' return is 40,362%, or 403 times over the 20 years period. So if during IPO, if investors was to invest in 1,000 shares in 2001, which at the time is 2,700 ringgit, so the value as at today will have grown by 1 million as at today, which is a very good return. And we are the second largest market cap in Bursa Malaysia, and in Singapore Stock Exchange, we are ranked number 9 in terms of market capitalization. So next slide is on the going forward. We continue to grow our company to achieve our vision to be a world-class partner in glove and healthcare products with our mission of ensuring safe human protection globally, supported by our values. So the market for glove industry is not mature yet. There is still a lot of opportunity. And Top Glove, being the world leader, the largest glove manufacturers in the world, we will continue to grow our business to capture bigger market shares. And we invite investors from China to join this journey of growth with Top Glove to benefit from the growth in demand for glove and also in terms of our continuous improvement in our performance for Top Glove. With that, Tony, I will hand over to you for the Q&A session. Thank you.
Okay, thank you, Mr. Lim. So here are a couple questions for you. So will the increasing price of rubber impact the cost of production?
Yes, definitely. If you look from the cost structure, any increase, it will definitely increase our cost of the as well. The nature of this business being glove being essential necessity in the industry, usually we will share the cost increase or cost saving with our customers. So if it's cost increase, we will pass on the cost to the customers. If there is a reduction in the cost of raw material, we will pass back the saving to the customer as well.
Okay. Another question. Could you please give us more details on the advantages of nitrile glove over other existing gloves in the market?
Yeah, if you go to the slide number.
Yeah, I remember the slide.
Number 8. Yeah, number 8. So there is different kind of glove. Slide number 8. So nitrile glove, the advantage is that it is more chemical resistance, more puncture resistance, and it is more petrochemical product. So there is natural rubber content in it. So natural rubber cause some latex allergy to some users, and so that is why like countries like US, they move completely to the nitrile glove. Whereas for consumers in developing countries such as Malaysia, Indonesia, even China as well, natural rubber glove is fine. In fact, natural rubber glove is more elastic, more comfortable, and also biodegradable as well. Whereas nitrile glove is not biodegradable. But for Top Glove, we have various kind of glove, so to meet the different end user customers' requirement.
Okay, thank you. Thank you, Mr. Lim, for
Thanks,
your
Tony.
participation. Now let's welcome Mr. Baoyuan Huang, the Vice President of Beibu Gulfport. 下面有请来自北部湾港的副董事长。
Next up, I would like to invite Mr. Huang from the Beibu Gulf Port. Good afternoon, ladies and gentlemen, and distinguished guests. It is my great pleasure to speak with you and speak to you on this platform, this 2020 ASEAN Capital Market Cooperation Seminar. So first of all, I would like to give you a brief introduction of our company. We are a big SOE, and we were established in 1985 and was listed in Shenzhen Stock Exchange in 1995, and one of the earliest listed companies in Guangxi province, and among one of the earliest publicly listed companies in China port companies. And we are located in the southern and western part of China, and we are at the intersection between the southern and southwest and ASEAN economic region. And also we are one of the most professional companies in this field. And after years of operation, now we're managing and own 82 berths, and with a throughput or handling capacity of 260 million TEUs. And now we provide the port handling and storage and other port-related and shipping-related services.
Including 28 foreign routes and 24 domestic routes, and it can reach the main ports in ASEAN and the main coastal ports in China. It can also reach Africa, South America, and North America. It also established trade relations with over 250 ports in around 100 countries and regions. Since the outbreak of the COVID-19 pandemic, the Beibu Gulf Port has both succeeded in tackling the pandemic and improving our business operations. In the first 3 quarters, we have realized 202 million tons of cargo throughput, up by 18.66% year on year. And also we have realized 3.75 million TEUs of containers, up by 31.02% year on year. According to the statistics from the China Transportation Ministry, the Beibu Gulf Port is the only port in China that have realized double-digit growth in both the cargo throughput and container throughput. And as of the end of Q3, we have realized operational revenue of 3.8 billion RMB yuan, up by 13.5% year on year, and with a net profit of 914 million RMB yuan, up by 16% year on year. In the next few years, Beibu Gulf Port will establish a number of 300,000 bulk good berths and 200,000 ton container berths. And now I would like to talk about Beibu Gulf Port's business with ASEAN countries. Guangxi is the only province in China to be connected to ASEAN countries, both inland and at sea. And the Beibu Gulf Port is the most convenient sea outlet in Western China. And in the first 3 quarters of this year, ASEAN has overtaken European Union as China's largest trading partner. And China, for the past 10 years, have been the largest trading partner of ASEAN. So the Beibu Gulf Port has 19 ASEAN foreign routes to 9 ASEAN countries, such as Vietnam, Thailand, Malaysia, Cambodia, Singapore, Myanmar, Brunei, Indonesia, and the Philippines. And the export goods mainly include fertilizers, chemical materials, manufactured goods, and machinery equipment. And the imports are mainly the timbers, light products, and agricultural, animal husbandry, fishery, and the forestry products. So by going through the Beibu Gulf port, the sea route traffic from ASEAN countries to China can be saved by over 20 days, and it takes only 4 days for fruits from ASEAN countries to reach the Beibu Gulf port. And now I'd like to talk about the new opportunities of the Western Land Sea Corridor. In 2019, the NDRC has officially issued the overall plan for the new Western Land Sea Corridor. And it has been specified that the Beibu Gulf Port will become an international gateway port, and it has the following features. First, it has enriched and optimized China's traditional logistics route. And second, it helps complete the circle of the Belt and Road Initiative through China's western region. And third, it becomes a multifunctional corridor covering logistics, trade, industry, and finance. Fourth, it is the most effective measure to promote the Western development strategy in China. And number 5, it is important to guarantee the strategy of relying mainly on domestic circulation and promoting both international and domestic dual circulation. General Secretary Xi Jinping has entrusted Guangxi with a new mission and the 3 main positions, that is to build an international corridor facing ASEAN to become a strategic pivot for opening up towards the Indochina Peninsula and an important gateway to connect the 21st century maritime Silk Road and the Silk Road economic belt. So it is an important platform to build the new Western Land Sea Corridor. So with the development of the new Land Sea Corridor in Western China, the Beibu Gulf Port has improved cargo infrastructure, transportation efficiency, and the service levels. So this has also boosted trade, logistics, and the clustering of industries and brought great opportunities for businesses in Western China. From January to September this year, Beibu Gulf Port has seen an increase in its throughput against the odds, and it is the only port in China to have achieved double-digit growth in both cargo throughput and container throughput, and with the fastest growth rate in China. And also, I would like to talk about our controlling shareholder, the Beigang Group, and its overseas business. I am the vice director of the listed company Beibu Gulf Port, but we are also the deputy general manager of our parent company. The group is one of the first SOEs to go out, and it is the pioneer and the mainstay for building the new Western Land Sea Corridor and the international gateway port. So our group has focused on the core assets of Beibu Gulf Port and has developed various businesses, including port logistics, industrial trading, development, energy, finance, investment, and charity business. In 2020, we are listed number 284 among the top 500 Chinese companies. We have been rated a 5A as a logistic company and have achieved a AAA credit rating. Our revenue will reach 80 billion RMB yuan with a total asset of 140 billion yuan. We also have investment in Hong Kong, Malaysia, Singapore, and Brunei. We have a lot of overseas investment projects, including Phase 1 and Phase 2 of China-Malaysia Kuantan Industrial Park, the 275 kV substation and the distribution project in the Kuantan Industrial Park, the Alliance Steel project in Malaysia, and the Mora Port in Brunei, and the Inland River Wharf projects in Thailand. In terms of our Hong Kong business, we have established an investment platform. In 2007, we have a Hong Kong company established under our group. And in 2016, we have a Guijiang company that was part of our Hong Kong presence. So we have formed an overseas investment platform focusing on Guijiang and the Beikong Hong Kong group. So leveraging the premium resources on this platform, our group has conducted cooperation in port, industry, and parks along the routes of the Belt and Road Initiative in Malaysia, Brunei, and Thailand. And second, we have conducted financial investment. We have helped many companies to get fundraising in Hong Kong. We provided them with fundraising services, bond channels, and supporting funding. And we have the financial licenses and the insurance brokerage licenses. So we are the first SOE in Guangxi Autonomous Region to have the whole industry chain financial licenses in Hong Kong. And third, we have conducted international trade. In 2019, we have realized a $476 billion of trade volume. And as of the end of June this year, we have realized a $418 million of foreign trade. And the fourth, we have developed ocean shipping. We have established a mature and robust ocean shipping fleet. We have we have 3 proprietary ships and 18 long-term rent ships. So every day we manage 80 ships with a cargo throughput of 40 million tons. And we mainly transport the food, coal, and bauxite. So in terms of our Malaysian business, we have invested the Kuantan Industrial Park, the Kuantan Port. So we have built synergy between the port, the industry, and the industrial parks. And in 2015, we have bought stakes in the Kuantan Port. We have leveraged our operation and construction experiences to improve the operation efficiency and throughput of the Kuantan Port. We have also invested and operated the 150,000-ton deep water wharf. And the Malaysian Alliance Steel Company is the first project to enter the China-Malaysian Kuantan Industrial Park. It was fully operational in June 2019. And this year, we're going to further expand this project. And the annual capacity will reach 10 million tons per annum. It will become the largest whole process steel company in Malaysia. So this project was highly recognized by local and international community, and its products has been highly recognized by Malaysia, Singapore, UK, and Japan. And the Kuantan Industrial Park is a system park of the China-Malaysia Qingzhou Industrial Park. So this is a new type of international cooperation. This industrial park has a planned space of 12 square kilometers, and the cumulative investment has reached 1.2 billion yuan. And there are 10 projects that have already been signed with a total investment volume of 35 billion yuan. It is estimated that it will create 20,000 direct jobs and will create 30 million tons of throughput for Kuantan Port and the 1 million TEUs of containers. Practice has shown that synergy between the port, the industry, and the industrial parks will be beneficial to the economy and the local people. And in terms of our Brunei business, under the framework of the Brunei-Guangxi Economic Corridor, in February 2017, we become a controlling shareholder of the Brunei Mora Port Limited Company. And we have formed a dedicated management team to operate the Mora for both container business and goods business. And now we are going through a massive renovation and upgrading of the port so that it will change from a traditional port building to a comprehensive port of logistics. On the other hand, we leverage the more ports, the head, and seek cooperation in economic and trade cooperation, investment, agriculture, and fisheries. We have won the bid for the Brunei Fishery Wolf project, and this can help build a synergy among the port, the industry, and industry so as to further promote cooperation development between China and Brunei. And our group has warmly responded to what President Xi Jinping, Premier Li Keqiang, and the Singapore Prime Minister Lee Hsien Loong has talked about. That is, we have strengthened cooperation with the Singapore PSA Port Group to establish an investment platform company. We have leveraged the premium brand of the port and the influence of the Southeast Asian markets to innovate overseas investment models. So this is another innovation in our business. That is the Thailand TBT Inner River Wolf project. This can help deepen connectivity between our group and the ports in ASEAN countries and is of critical importance for the Belt and Road Initiative. And our group is also conducting cooperation with Indonesia, Cambodia, and the Philippines. As our next steps, we'll continue to conduct cooperation in port, industrial parks, and industries with ASEAN countries. In the future, we will further explore opportunities in cross-border cooperation and then leverage our advantages in capital markets so as to create an even better future for China-ASEAN cooperation. Thank you very much.
Thank you very much, Mr. Huang. Thank you for this introduction. And in the interest of time, I think I only have time for one question. Since COVID-19 this year, we see a very rapid growth of the container and cargo throughput of Beibu Gulf Port. And does this have anything to do with the relatively gloomy public health situation in Europe and US, as well as the strength of the China-ASEAN economic and trade tie? Well, it's definitely relevant and related. And since COVID-19, because of the outbreak of COVID-19 and also ASEAN becoming China's biggest trading partner, and we are further expanding our exploration of foreign trade markets and to further solidify and tap into our advantages in Southeast Asia routes, and also have frequented our shipping routes in these regions, and we see a year-on-year 18% in terms of our handling capacity, in terms of our throughput in TEUs. And also we focused or specializes in this region, and we have been solidifying and developing our domestic market for years. And with the advantages that brought about by the new Western Land Sea Corridor and leveraging our positions, that we have been incorporating and combining the industry plus port and plus trade, and now we have delivered 3.047 million containers, and that is also an 18% year-on-year increase. And this is definitely have a lot to do with our closer ties with ASEAN countries and markets. Thank you.
Okay, that will wrap up the 2020 ASEAN Capital Market Cooperation Seminar Manufacturing Session. We want to thank the Stock Exchange of Thailand, Bursa Malaysia, Shenzhen Stock Exchange, Malaysian Investment Development Authority, MIDA, CGS, CIMB, Singapore and Thailand, Sealand Securities, Siam Cement Group, SCG, Top Glove Cooperation Berhead, and Beibu Gulfport for attending this event. If you want to review today's event or contact any company, please feel free to scan the QR code or have a go on the VNext website, www.v/next.cm. Thanks again, and have a good weekend. See you next time.